Okay, everybody, let's take a look and see what I think could possibly happen going into this week coming up here. So, looking at the S&P 500 futures, it's E-mini, and don't forget you can also trade the E-micro, which is /MES. If you want to trade those, you can. Okay, really nice product. Let's take a look and see what's going on here. First thing we're going to look at the daily cycle, and we'll even look at the weekly cycle. Okay, so today is, I believe, the 21st. Yes, November 21st, Sunday, and in a few hours here, the futures market will open up. Okay, let's take a look at these two cycles. Talked a little bit about this on Friday, but we're going to cover it here again. So the first cycle is the shorter of the two, is this yellow one right here. Okay, now that one I think ends on the 15th, somewhere right around there. Yeah, 15th, 16th. Okay, so need to be really mindful that there's the potential, just as we look back here, that this cycle could potentially stall, or I should say the pricing could stall kind of in the middle here, which would be right at the end of the month, about 11:30. Okay, somewhere right around there. If this cycle is accurate, which we're not 100% sure it is, but if it is accurate, then whatever this price does between now and then, today's only the 21st, so there's 9 calendar days till we get to the 30th, but it may go to more all-time highs, it may come down, it may just do whatever. Wherever it's at, when it gets over here to the middle of this cycle, I would expect pricing to probably just kind of flatten out for like a day or two or three and just kind of go sideways. Okay, candlesticks might get small, you see less action, you might even see a decline a little bit going into the middle of this cycle. Okay, and then from there we'll see whether or not prices decline going down towards this cycle low. Okay, so this is obviously the 50-day moving average right here. For those who don't know what that blue line is, that's what that is, 50-day moving average. Now just keep in mind that 50-day moving average is still rising, right? So even though we're talking about the potential for prices to decline, okay, the 50-day moving average on the average is moving up, right? It's not going down. Now, let's talk about this green cycle here. This is a different cycle. It's also a daily cycle, and it's a second cycle that I have in here because it's possible we could get this cycle instead, okay? And if I remember right, this one's like just before Christmas Eve. Yeah. Basically ends on the 23rd, I think, somewhere around there, 24th. Yeah, December 23rd, okay? So be mindful that, there's a possibility of, a multitude of influences here in the way that the cycles are kind of overlapping here, or just different daily cycles that could be in play here, okay? So anywhere from like the 15th or the 16th, all the way out to like the end of the year, right? I think that whole area in there is a risky area. And we'll know when the price comes down because it's going to bounce, right? You're going to get some kind of bounce, Now, the question a lot of people have been asking is, well, how far down do you expect the price to go? How far down do you expect the price to go? Well, it's not easy to determine that. You can put your Fibonacci retracements in here if you want to, okay? I don't really dive too deep into Fibonacci retracements. I don't give them as much credit as other people do. I'm not saying they're not important, but I think there's too much reliance on the retracements, to be honest with you. Will it come all the way down and touch this 50? I don't know. It's hard to say. Based on the fact that we didn't get a continuation off of this right here, like I talked about on Friday, that we didn't get the 2018 scenario where the whole late September, October, quarterly options expiration, which is a very typical time of year for prices to come down. In 2018, this just continued, right? It just tried to muster and it didn't. It just went all the way down to literally to Christmas Eve in the year 2018. Well, this year we didn't get that. We got a very, very strong rebound. So, just going off of that alone, I'd have to say I don't even know if it'll reach the 50. It might. It could surprise us. Okay, so keep in mind that the distance from the bottom of this candlestick, meaning the lower wick, all the way to here, is 3.8% of the low. Okay, not the close, but this price right here, 4684.25. Okay, so 3.87%. Can it come down that far and meet the 50-day? Yeah, it could. It could come all the way down there. But like I said before, this is rising, so just keep that in mind. I'm just kind of extending that out. And between now and November 15th or 16th, I'm sorry, December 15th or 16th, there's quite a ways to go. So we have to wait to see what this pricing is going to do. But, it could still go higher. It could break all-time new highs again before that even occurs. So the other thing to pay attention to is that, we are getting these divergence warnings that have been going on for quite a while. It's kind of out of a recent low, and I talk about false flags all the time when you come out of these recent lows like this. So, it's possible these are still false flags. But we're going to switch over to the weekly so we can get a little bit better feel for different time frames, okay? And let me see if I can get the right drawing set to come up for the weekly. Okay, so these arcs here, these yellow arcs, these are, my best estimation at the weekly cycles, okay? So there's a couple of different places you could pull these weekly cycles from, but for now I'm just going to stick with what I got here. And that is, you can see there's a low here, there's a low here, there's an approximate low right here within like 2 or 3 weeks. So, they're kind of close. This one's obviously dead on. So with that in mind, that would put this weekly cycle low January 9th, okay? There are other ways that these cycles could be pulled, just depending on where you're going to pull and how you're going to draw your cycles. But for now, I'll stick with that. So in the weekly, there's a potential for a cycle low out there in about the first or second week of January. Okay? So they're not either the weekly cycle and the daily cycle are not exactly overlapping each other, right? There's a good 3-week difference between those two. But overall, the fact that you've got a price low somewhere estimated in the first or second week of January, you got a price low estimated, let's say Christmas Eve. So, overall, they're close enough to where I think you could get, multiple influences on the cycles to where prices are probably going to come down, okay? So bear that in mind. Anytime you get two cycles that are basically, coming into a cycle low at the same time, then there tends to be more influence on pricing. They're not exactly synced up, but they're kind of close. The other thing I want to talk about here just briefly is that on the weekly chart, now these are not false flags. These are way far enough removed from any low that, I think there's some significance here to these warnings here about divergence, okay? So, just keeping this very simple, kind of divergence we're talking about. We're talking about this right here. If I can get a straight line drawn. Okay, clearly that's going down, right? It's not really happening on the SMI. It's barely there. This point is slightly higher than this point, but not by much, but it's there. But so you got divergence going on in both these indicators, more so on the Big Daddy than on the Stochastic Momentum Index. So, excuse me, just got done sneezing a bunch of times. So that's what's showing up here. And yeah, I mean, to me, not only do I see that we have the warnings, but you can visually see the divergence going on. This is kind of typical, though, coming out of lows like this, come up, and then you'll get prices that stall and flatten out. It happens over and over again. Over and over again, you see the same pattern with price action. Comes up, flattens out, and stalls. So we'll just see what happens from there. A lot of times it'll flatten out and stall, and then gain some momentum. Or, especially if you're coming into cycle lows, it'll flatten out and begin to roll over a little bit. The truth, guys and gals, is the S&P 500, historically, I mean, unless you get huge events like we got in, 2008, that basically reset the market, okay? But all the other stuff is little Mickey Mouse stuff. I mean, even the pandemic. Look at this thing. Okay, let's go switch over to the monthly so I'll kind of make my point. Okay, here's the monthly chart. Okay, I don't have any monthly cycles drawn out right now because I'm just not going to go to the monthly cycle thing for now. But look at this. This was the whole, crash for the pandemic, whatever. Okay, and even it barely got below the 50-day, or I'm sorry, the 50-month. Okay, only the lower wick really got below it. The body barely got below it. So even everybody called this a huge event. It wasn't. It wasn't a huge event. Not on the grand scheme of things. It's a little tiny event. It doesn't come close. Doesn't even compare to anything in the amplitude percent crash, or I should say the magnitude of the crash that we had like back here in 2008. Now that blasted through the 50-month moving average. Look at it. Without zooming in, okay? But it went well below the 50-month moving average. It's way up here. This thing came way down here. That didn't do that. Just the lower wick did. Okay? And we had the same thing from 1998 through about 2003 or 2002. 99. Okay? That blasted through the 50-month. You don't have any of that going on. Hasn't happened since 1998. So this little event here, from the stock market's perspective, nah. It ain't as big as people made it out to be. So what does that mean in my opinion? Because we are talking about opinions here, right? And when we look at and everybody on YouTube that does their videos and talks about every day about the whole world's going to crash, it's going to crash, it's going to crash. Every day's videos about how it's going to crash. Give me a friggin' break. They've been talking about crashes every day for the last year. Well, it hasn't crashed. Back in, I think it was July or August, I said that we were going to get a significant pullback coming into autumn. Well, we got this 5 or 6%, and I said it could even go into January. We'll see if it happens. We got this 5 or 6%. If it doesn't happen by January, guess what? I would be wrong. Heaven forbid we're wrong, right? Yeah, the whole world's looking for somebody who's going to perfectly tell them what the financial market's going to do every day. Good luck with that. When you find them, let me know. Leave a comment. I'll join you on their YouTube channel, okay? Meantime, we're going to continue to do sound financial analysis. And it looks like to me right here that this thing is obviously extremely elevated. Again, unless this candlestick pulls back and makes new lows, we're at 29.66, second highest time in stock market history. Okay, the only other time higher, as I said before, is 1998. Even the 2008 didn't have this amplitude. Okay, 1998 is the only other time that we had this kind of amplitude. Okay, and yes, we have some warnings here as well going on, saying there's divergence going on. Okay, it's not huge. There's some small divergence going on here, but it's there. It's obviously pulling from back here, looking at some divergence from way back here. But I'm just looking at these indicators, and right now I don't see a big divergence going on. There's a small one going on right here on the SMI. Believe it or not, it's actually picking it up better than the Big Daddy this particular time. Okay, so the SMI is warning us of a divergence. Okay, so something we need to keep an eye on. More than anything else on the monthly chart, what stands out to me more than anything else is the sheer fact how far removed from the 50-month moving average we are. So what's going to happen? Well, it's going to return to it. And why? Like I said before, like a week or two ago, because it always does. And it will do it. That doesn't mean it's going to drop straight down like you see this yellow line. It just simply means as this thing is rising and continues to rise, okay, something's going to happen where, it's going to start to make its way down, okay, wherever that is. Maybe that's in 2022. Hey, maybe it starts to happen right away going into because, now we've got some tapering going on. Even though the Fed, who has messed everything up from here to Timbuktu, who shouldn't be touching free markets, but they just love to mess with markets anyway and overregulate stuff and think they know better. They don't know better. They're the ones that got us into this damn mess. But in any case, we may see something in 2022 where the market really pulls back really hard. Okay, so do I think we're in for a big crash? Oh, heck yes, we are. Absolutely, we're in for a big crash. The question is when, right? And right now, there are no indications in the monthly chart to tell me that we need to watch out for a big crash. If I see it, I'll put out a video about it. Let's look one more look at the weekly. There's some warnings going on here. Okay, there's obviously some weakness for the last 2 weeks. The bottom line is, guys and gals, until we see some red candlesticks and we see something pointing down, there's no reason to talk about a crash yet. I don't care how many Elliott waves you smack around. I don't care what this guy said or that guy said. The candlesticks aren't telling us there's a crash. They're going to have to tell us there's a crash, meaning show us some red, show us some downtrend. Okay? Show us the gap between that and the 50 starting to close. And then we can all look at the monthly chart and go, ooh, maybe we're in for something giant and large and big like a crash. Seriously. Right now, on the short term, yeah, there's potentially a pullback. Let me switch back over to the daily chart, daily drawings. Right now, in the short term, there's a potential for price decline either coming into the middle of December or more like Christmas Eve. Okay, that's what you want to be looking out for. You want to just keep an eye on this daily chart and see how it's responding and the distance it has, to the 50-month moving average. Okay, if it starts moving down into that, then okay. And just keep in mind that that's a pretty significant drop, 150 points. Okay, could be 100 to 180, 150. There's a lot of money to be made if it makes that kind of drop, okay? You could definitely short side those things. I'll be putting out videos every day about the S&P 500, okay? So, be on the lookout for that. If I really think there's opportunity there, I'll definitely talk about it. The hourly chart, just so everybody knows, and even occasionally the 5-minute chart, I share that with the premium members, okay? So take advantage of the $5.95 because it's less than a pizza you're paying for every week, okay? And plenty of my members have already said, the premium members already said, they use my videos, they apply to their own style, and they've paid for the premium membership for months and years to come, all right? It pays for itself easily. So take advantage of it, okay? Hope everybody enjoyed the video. Hope everybody's having whatever's left of your weekend. I hope you're enjoying your weekend. Here in Texas, we're actually having some pretty good weather. I'm in the southern part of Texas, enjoying some pretty good weather right now, all right? We know we got Thanksgiving coming up, so happy Thanksgiving to everybody. All right? Please subscribe to my YouTube channel. Give me a thumbs up. Don't forget to click that little bell to be notified of all the videos I put them out. Talk to you all real soon again next time.